Morning all, how are you all doing? How is everybody? Welcome to Friday. At last, it's Friday. Sorry. Morning, Christian, Peter, Amy, Danny, JC, David, how are we doing? Giaraki. Hard one, that one. Morning, Peter, Jimmy, Andres, Virginia. Buenos dias a todas. Todos. Morning, Rajiv. Just running testers still at the minute. This is the test I started yesterday morning. Still running. Let me just copy these over just in case. Wrong, which it does. We got 770. It's looking like it's better to close out end of session on the DAX than it is to leave it running all day, but we will find out later. Right, so just quickly covering news. Good night, good morning from SoCal, Grateful Buster, morning. So today we have Lagarde speaking this morning. Unlikely she's going to impact anything because obviously she was running the press conference yesterday. So everything was said yesterday regarding the euro. Excuse me. We've got 1:30 this afternoon, Empire State Manufacturing Index. And then 3 o'clock, we've got Michigan. So these two are very, very hit and miss as to whether they do anything. The market tends to use them if it needs to, but they don't really have a massive impact on anything much. So if they do come out as negatives, though, I think the market will probably use the opportunity to dump some US dollar because I think we're waiting for it, aren't we? So we'll see what happens with those. But obviously, we need to be aware of those because it's an hour before and half an hour after the US Open. So for index trading and opening range breakout strategy, we need to be aware of that. Overnight news, I had a quick whiz through. Suzuki was saying some bits and pieces, but nothing to do with FX. China sold some FX brokers to cut proprietary trading this week. Quite sure why they would do that, but anyway, probably something to do with BRICS. But apart from that, not a lot overnight. So nothing exciting really to report there at all. So a bit of a weak news day today. Pound is pushing back up against the US dollar. The euro obviously dropped yesterday, has continued this morning, or rather during Asia. So we had another drop during Asia. We just accumulated after yesterday's drop. That's on the Aussies, obviously. The Aussies powered up a little bit overnight. So we'll see what these do, these euros today. Difficult to call. Pushing up against US dollar this morning. But it's a tricky one, this. Look at that. Euro US dollar got into, I really wish I'd have got out of this yesterday, but never mind. Done a drawdown control on it overnight because it obviously has, that was a big move yesterday. 120 in the end, so closest, damn it, 200 ADR yesterday, 175 ADR on the euro US dollar. So today there's a good possibility of a V-shaped recovery forming on these, although that's going to mean 150 ADR to the upside. So the only way we're going to achieve that is negative University of Michigan news this afternoon. That will weaken the US dollar and give this time to pop back up. But apart from that, not a lot. So I did a percent of drawdown yesterday. So we're halfway through the month and I am still break even. I can't squeeze anything out of anything this month. It's just painful this month, but you get months like that. Nothing you can do about it. DAX so far this morning has gapped up and rallied up as well. So it's a tiny, tiny, tiny gap, but it is a gap nonetheless. So that's pushed up and rallied up. So we'll see what happens there. Doing something else over here. We've got the gap fill to the upside still on the DAX to complete from beginning of August, end of July. So that was the monthly gap. So that's 150 ADR today. So it's not within reach. to fill the gap, we're going to need 200 ADR. I mean, it is within reach, obviously, but it's very unusual to get a 200 ADR move on the DAX. So it's not far away, though. Next week, we should be rallying back up to do that next week. So today, upside risks are basically the 2-week high and the weekly high. Weekly high is just above us in this propulsion gap, which we tested twice, and they've sold back out of it twice. So there's going to be sell orders sitting up there, which is literally just above where we are. Look, yeah, here. So if we do get a push up, we could hit a brick wall immediately when we push this morning at the open. In which case, then obviously the rebound play would be down into the gap fill. Downside, after this huge move, it's difficult to call a downside. Obviously, this is yesterday's high, which is the gap fill. Other than that, you're looking at 150 ADR for that propulsion gap fill, which is these highs. So it's a tricky one today. With the euro being so weak, obviously, weak currency means strong index. So obviously, euro dropping like a rock has made DAX fly. If the euro recovery goes V-shaped today, DAX is going to undo all of that movement. So we'll see where we go at the open. I don't think the market's going to hang around for Lagarde. Very unlikely. Lagarde's talking at 10:45, so that's like 2 and nearly 3 hours away, and everything was said yesterday. So it's unlikely we're going to hang around this morning. So we should get off to a decent start. So how long we got? 1.5 minutes. Morning, AZ. Morning, Baggy. Morning, Jerry, John, Ismet, Day Trader. Morning, Kennelly, Astro. RSIs and ADRs. We have got 3 ADRs already this morning, which we will have a look at. Weekly ranges we looked at yesterday. Still no monthlies. RSIs, we had a lot of extensions. So we'll go and have a look through all of these. But yeah, there's finally, haven't seen this literally for weeks, have we? This is the first time we've had some dashboard action on the RSI dash for weeks. We are getting there, hopefully. Market is starting to move. Bear with me a sec. Let me just adjust. Oh, wrong one. Okay. So yeah, we'll see where we go at the open with the DAX. So the pre-market range today, very nice. Nice little tight accumulation pre-market. So quick break either way. But as I say, watch this upside resistance. So there's another high there at the top of the propulsion gap, which they sold off of, and they sold off of that level as well. So obvious play would be a short today, which it looks like it's wanting to do already. So there's your pre-market 15, which is bracketing that 5-minute as well. That 5-minute candle is basically the pre-market 15. Going long. Okay, so long straight into resistance. This is a tricky one today. Never good buying into resistance or selling into support. But hey. Morning, Tom. Quite a tight little range today. So 210 is the initial opening range today. Pre-market, that is. So just watching to see if we get limit orders triggering here. I'm looking for price to butt into this level over and over again and just get pushed away, which would indicate there's an iceberg order here, a big limit order placed by a bank. In which case then the guys trying to bash through it will just give up and drop back the other way. So we'll see if there's anything there. Okay, push back inside the opening range. Not a lot of liquidity today. Very quiet. Blimey, that is quiet, isn't it? So, yeah, we have hit that support, but I wouldn't say there's actually a lot of activity. Doesn't look like there's actually a lot of buyers in the market trying to get through it anyway. So we've certainly hit the sell orders, but we'll see. Bit difficult to tell there. It's not really the sort of price action I was expecting. You would expect basically it to come back a lot faster if there's a brick wall sitting there. But it doesn't look like there is, to be honest. So let's just wait for this candle to close, and then I will go and have a look at the FX, because nothing much is happening, is it? Well, it's a bit of a boring stream this morning, isn't it? Watching this candle. I just want to see if it actually gets any momentum, but because if it does pop this level, we should get quite a fast spike up. And I just want to watch, basically, if we get that pop through this level, I'm expecting it to run up to the top of this propulsion gap, basically that high there, fairly quickly. And obviously just want to watch for taking profit up at that level, because my target is at 2R, which is going to be roughly around where the top of that propulsion gap would be on the hourly. So I just want to be able to react to it, but it doesn't seem to be doing it. So 20 seconds, we're not going anywhere. So rejected the highs. So we might get a pop back down into the gap fill this morning. Doesn't seem like there's any buyers in the market yet today. So we'll see if that goes in a minute. But we're certainly not having a run at that level, are we? I will keep an eye on it over here. I've got it running on my other terminal. So we'll see where it goes. Right. Let's have a look at what's going on in FX world. So ADRs today, there's a couple of ADRs this morning. Aussie dollar Swiss, so that is extended to the upside. That's an hourly RSI extension as well. We'll look at the RSIs in a minute. But the Aussie dollar's had a good night. Decent move yesterday on the Swiss franc weakness. So that's an RSI extension and an ADR hit. If you look at what happened last time we got above the 70 level, we basically just flagged and then broke again. So if you look for a sort of similar move, but we've got a nice big sort of 3-day push here with no profit take move whatsoever. So it's a big push up, big push up, big push up. So good chance of a pullback on this back into these highs here. So decent move to the downside on the cards. 5-minute reversal alert this morning's already kicked in. So there's your M pattern reversal. As soon as we break that low, we should get a nice little flush. So looks good. Aussie Swiss comes straight off of ADR. If you look at it on the higher time frame for next resistance, it's not really until we get up to this monthly high, which is this high here and this low. So basically it's this low here we hit, broke it, retested it, came up, flipped about, retested, retested, retested that level. Yeah. So it's good 250 ADR away. So if you do get into this as an ADR reversal and it doesn't put a pullback on that, you'd be looking to scale into it and out on the way up to there. We are pushing on the DAX. It's just made a new higher high, but again, we've been pushed back. So that's your 5-minute opening range break. You are long. They want to try, don't they? But there's no volume this morning. Market's exhausted after yesterday's moves. Aussie dollar Swiss, Aussie dollar yen, same thing. Big push up on the Aussie dollar yen. Let's just see what happened to the US dollar yen yesterday. Nothing. So Aussie dollar yen ADR hit to the upside as well. That one you've had a reversal alert on already as well this morning. Nice tight reversal alert, and we're in the retest at the moment. So potentially that is your lower high just gone in there, that double top. Nice double top there. We break this low and get through that propulsion gap. Good move down into there. So yeah, Aussie dollar yen looks nice. New Zealand dollar yen, pretty much the same trade. Yeah, so take one or the other. You've had a reversal alert off of ADR. So there's ADR. You've had a reversal alert off that spike there, which was this candle here. And then it's pushed up, just put a new high in. Second reversal alert's just gone in there. So you would have entered there if you've got the EA. But that's potentially the M pattern going in. So Aussie and New Zealand dollar yen look good for shorts. Resistance wise, it's pretty much at the resistance at the moment. You've got this other level sitting up there as well, which could potentially have limit orders. That's a really good level, that look. To the pip. They rejected 87.80. So 150 ADR. Potentially could be the next resistance if we don't get a load of sell orders entering here, which is market's looking a little bit lackluster this morning across the board, really. So good moves on the Aussie and New Zealand overnight. Those are your ADR reversal opportunities. A few of those in there. We're probably not going to do much on the US dollar, I wouldn't imagine, today until we get to the manufacturing index later and the Michigan numbers. So we'll see with the US dollar, but I suspect they will be moving those Aussies back today. Biggest weekly inflow to US equities since March 2022. Biggest inflow to large cap stocks since May. Interesting. Didn't actually move the stock indexes, that massive inflow of stocks, but you say so. Anyway, morning pot guider, pound US dollar. We will have a look at that. DAX has just rejected that high again. It's got no volume though. It's just literally got no volume this morning. Common error. I've got a common error on my terminal, whatever that is. There we go. Starting to push back up again. See if we can. Third time lucky. Come on, DAX. Get your legs on. I don't know why I'm looking over there. I've got exactly the same chart in front of me here. I'm just looking over there because I've got money running over there as well. But anyway. Come on, do something. Not very good entertaining YouTube, is it? Thinking about it. Right. Let's look at the RSIs today. So we've got loads of RSI extensions. Some of these are going to be those ADRs as well. There's my dashboard, if you can't see it, this side is H1 RSI. This side is H4 RSI, 14 and 21 RSIs, basically. So we've got a few hourlies. Yesterday, on all of that movement on the euro, we had quite a few extensions on these hourlies. So there was a few opportunities to get into stuff yesterday. We just made a new higher high on the DAX. It's just literally every higher high we are getting given, pulling back from, look. Yeah. The limits are triggering at this level. There is a massive batch of sellers at this high. So market's really struggling to get through this level today. There's a good chance these buyers are going to puke and we're going to collapse back the other way. Just want to watch this for a minute because downside on this today is quite tricky. We've got the gap fill down here, which is, I suppose it's 3R, isn't it? So it's not actually a bad distance. I just don't really want to get hedged on this today. I'd kind of, when you're reading price action, it's so obvious that sellers are in control of this market at the minute. And when you're long, you don't want to be long, do you? So good idea, Astro. Get the old rocket out. Get the rocket underneath. It's a manufacturing issue there. And let's put a bit of colour in there as well. Let's make it a proper flamey one this morning, shall we? But I can't analyze any other charts for the minute. I just got to leave that in place just to make sure. That should do the trick. You're right. I completely forgot about it. I forgot I had complete control of the market and I knew exactly how to make it rise. You watch this thing absolutely fly up to the 2 week ago's resistance. When your hedge is triggered on the DAX, how do you manage loss lock? How do I manage loss lock? I don't. It just is. I'll show you in a minute. But basically, I look for an area to get out. The EA handles this new EA that I've developed handles automatically. When you're hedged, it will automatically get you out of the hedge at a point that you can set, and then it will try and escape the other way. There's 3 different escape mechanisms I've built into the hedge system, which I'll explain in a sec. I don't like this. If this paints an inside bar, I'm out. There's too many sellers here. This is our fourth run up at the limit orders. If it doesn't get through this time, it's not getting through. We're going to flip short. Kind of tempted to take a 1R on it. It's enough for me this morning based on what this is doing. But if we do pop that level, that is going to really kick through it quickly. I just don't really want to get a hedge on this morning because there's not enough volume in this at the minute to actually get out of it, I don't think. Why do I keep looking over there? I've got the same chart. It's really weird when you're using multiple monitors. I'm like looking at this and looking over there thinking, it's doing the same thing. I have no idea why I do it. It's bizarre, isn't it? Anyway, it's like that chart's going to do something different to this one. Right, so we're putting an inside bar in now. Look, we haven't managed to make a new high, so we're making a lower high now. Higher low, inside bar. That's a indecision. basically. So the buyers that are trying to crack this level, some of them are giving up. We haven't even managed to get back to that high yet. So if they're starting to give up, there's only one way this is going to go. Unless we do find some more and they crack this high and then we get that pop. We'll see basically what you'll see if the buyers are going to win this. You'll suddenly see this candle jump double the size, which is basically all the limit orders shorted there exiting and becoming long orders. So this is the bots basically flipping back the other way, basically giving up. Someone's got to win, someone's got to lose. So you'll see that pop. It's what they call the puke. I will do the RSI analysis in a minute. I just need to watch this because go. Here we go. They're eating up the orders. We've paused. Now we should get the pop. Come on. Not there, is it? Bit of volume coming in. Come on, push. Still looking over there. Maybe if I bring this chart over here. There we go. Let's put the rocket on that one. See if that helps. That seems to be helping, doesn't it? Let's push it down a bit. There we go. Go on. You can do it. Go on. Not getting through, is it? Uh, 30 seconds. Come on. Shit. I'm taking half off. Break even on the second half. It's $1,300. Just not got enough legs for me. That just doesn't seem to have any power this morning, and I just get the feeling it's just not going to be able to get a run out the highs, and we're just going to flip-flop. It might just be one of those slow, grindy days where we just grind, and if that's the case, that's fine. I'm going to trail this one, but I'm just worried about them giving up, and it's going to come down very quick if they do, because we know there's a lot of buys or buys in place. So. And we got the gap fill to do, so there's a reason to go short, but I'm going to bank that and just see what happens with the second half. Otherwise, I'll sit here all morning watching it. Right, there we go. One R on the break if you want it, but I mean it might go. I might be out way too soon on it, but it's just not getting anywhere, is it? So yeah, basically, just to quickly explain on the DAX hedging. So what the EA does, I'll explain all this when I do the video about this EA when I do it. But what the EA does is it places two orders when it enters. One of them is a short target. One of them is a long target. So it's a runner. So the way this one is set up today, it's not necessarily the right way to do it, but it's what I've got set up at the moment, is the first target is 2R. The second target is 5R. If the EA gets hedged, there we go. I'm out break even, so it's $1,500. But I don't like the look of this long. So if we were to get hedged, so let's say, for example, I hadn't taken that off and broke even the second trade, and we hadn't hit our target at 2R, if this pulls down and hedges, what it does is it moves these up to target 2. Yep. So basically, when you get hedged, what we're doing is saying, right, the breakout's failed, we haven't managed to get target, so now we need to deal with the situation that we're in. So it removes these targets here, moves them up to there, so we're now looking for a run to 5R. Yeah. Let me just clear it. So what we end up with is targets at your second reward level, whatever that may be. So you could use 1R and 3R, 1R and 2R, 2R and 4R, 2R. It's up to you. You could use 3R and 3R if you want to. But basically what it does is it now has 3 options to exit. Number 1, strategy 1, is we wait. Yeah. And it hits your target or it doesn't. Regardless, it closes it out just before the New York Open, or if you're trading New York, at the close of the New York session. So it will just bank the loss. Yeah. Or what will happen is it will hit your target, it will bank all of that, and the market will just generally move around. And if it's up here somewhere, when we get to close time, excellent. We close out the longs, and the difference there is your profit. Yeah. So it's what I call a conservative hedge exit. So all we're doing is we're saying, right, we don't know what's going to happen today. It's hedged. The market hasn't really got a direction. If we get down to here, bank it. And then just close out the long position, or the wrong position in this case, wherever it ends up. Yeah, so we just want to get out of end of session. That will either be a profit or it'll be a loss. We don't know. What could happen is it could hit your 5R, come all the way back up to here, and be in profit on the longs by the time it closes. Happy days, we make a fortune. So that's scenario 1, which is a conservative exit. Second scenario, as you can see, we are coming back down again now. Those buyers just didn't have the legs. So that was the right decision to get out. The second exit is once you're hedged. When we get down to here, down to the 5R or whatever you set as your hedge target, it will immediately, when it closes the short positions out for profit, it will then place a pending order in the market so that when the market pushes back up, we are taking second positions, which means that our long position is there. We then dollar cost average into it by taking additional positions, which brings our average down. We then have what's called a loss recovery target. That loss recovery target you can set as a percentage of what you've made on that short. So if you made, for example, 5K on that short and you set your loss recovery target to 10%, it would go for $500 profit in total. So when this order is entered here and it pushes up, it will try and make $500 and close out those positions. That's exactly what it did for me yesterday on something. No, it wasn't. It was the day before. Can't remember which it was. But anyway, so yeah, it will close out in a profit. Yeah, so that's what I call the aggressive exit, the aggressive hedge exit. And then you've got the third exit, which is an optional add. So basically, this is a lot more risky. Oh, by the way, with this one, so when you've got that long on there and we've hit this target and it adds that second pending order, if the market continues to push in against our direction, that pending order will be cancelled off and added, cancelled off and added, cancelled off and added. So it trails a pending order behind price so that you only enter that dollar cost average move when the market has got buyers on side. Yeah. So we're getting in when the buyers enter the market, not we're getting in because we've got out of our position. We only get in on strength. Yeah. So the third way of getting out of the hedge is basically using ADR. So we know that the price will spend most of its time, 58% of the time, within ADR. So if we get to ADR, we know that there's a good chance that we're going to start a reversal, because by the time the market has got all the way to its average daily range, typically it starts to run out of steam and we either get an accumulation or we get a pullback. So the third option you have is targeting that. Let's say we put it at 4R, for example, that taking profit and then adding a second position on. If that second position doesn't move far enough to get you out and it pushes down against you, it will add more pending orders at ADR. Again, only one more to say, right, we've dollar cost averaged into it. There's our average. We didn't get back to where we wanted to get out of the position. It's pushed further against us. So we repeat the process when we get beyond ADR. Add that pending order. And if it keeps pushing down, we keep trailing that pending order and we take a third position, which brings our average further down. Now, when we're getting out, it's much easier to get out. And because we're way beyond ADR, probabilities of a pullback are much, much higher. Yeah. So those are the three exit options. My testing has shown that if you use a 2R and a 5R and an ADR, it's too aggressive, because what you end up doing is you get into 4 positions down here, because often you can see how close 5R is to ADR low. That's mathematically calculated. That's why we're using 20% of ADR. So if you take 20% of ADR, multiply it by 5, you're going to be roughly around about ADR, aren't you? So the best way to use the ADR exit is if you're using smaller targets like 4R. So if you use a 2R and a 4R, what you'd end up doing is on that long, you would get out of your shorts at 4R, add a second position pending down here, which would trigger. If it doesn't quite get to where you want it to be, you add another one down at ADR. So my testing has shown that if you get a 5R target and an ADR target, often these will trigger at the same time. So you get 2 positions long there and you get 4 positions long here. Your average will come down really quick. And as soon as you get an uptick, you're out. So it's a really fast exit. However, because you've taken 6 positions, if it triggers all of those positions and then it decides to run down to 175 ADR, you're going to be in a lot of trouble. So it's highly risky. However, the number of times I've witnessed it happening, I'm running tests at the moment to export all the data to get the numbers on all of this, but the number of times I've seen it happen is very few, because most of the time it will get out of these hedges at these levels, or it will just lock in whatever the loss is. So that's how it works. I'm still running all the testing, obviously, as you know, at the moment. So I will be looking at the bell curve and where the best averages are for everything. But as you've seen this morning, yeah, you're a human being. You need to read price action. It was obvious to me that this was not having much luck getting through. And I had money on the table and I took it because I was expecting this to happen, and it is happening. So the EA can't make these decisions for you. So the EA is only as good as the EA is. But when that triggers short and you are hedged on that, the EA has a plan, multiple plans to get you out of it, which will be set to be whatever is the best way of getting out of it. But it's down to the market whether that happens or not, isn't it? So you're either a fully automatic trader or you're a discretionary trader. Discretionary traders always make more money. So there you go. Anyway, so that's the DAX done for me anyway this morning. If you've taken the 5-minute ORB today, which is the pink one here. Sorry, it's not. It's the blue one there. Well, it's pink and blue. You are long on it, and it's just about to look like it wants to break short as well. So, bit of a tricky one on the 5-minute today. But, right, RSIs. Any questions on that before I move on? See the market moving. That rocket's going to need a parachute shortly. Exactly. Good read, day trader. US 30 going back to the daily open. Don't know. We don't trade the US 30 because it's not the New York session. How many times do I have to say this, people? You trade US indices in the afternoon, European indices in the morning. US indices do not move in the morning. It's the Globex session. They do move, but not enough. Look at the Dow. You're going to surprise me now. The Dow's going to be going mental, aren't you? Yeah, look at the pre-market movement on the Dow and look at post-market. It just doesn't do anything. Saying that the DAX isn't doing much this morning either, but US indices in the afternoon, not in the morning. They are explosive in the afternoon and snails in the morning. Right, hourlies. Aussie dollar Swiss. DAX 1600 is near. Do you think these round numbers attract buyers and sellers? Yeah. We got a 1600, have we? There. So yeah, that's the top of that propulsion gap as well. Bang in the middle of these two resistances. So there will be orders sitting there. There is always orders sitting at round numbers. But it's like anything. All a round number is a support and resistance. The decision whether we break that number or we reject that number is based on how many buyers are in the market at the time we hit that number. We know there's going to be sellers there. Unlikely there'll be buyers there. There might be some in there. But if we hit this with a huge buying wave, doesn't matter how many limit orders you got there, you're going to get run over. So you will always get a reaction and resistance there. And it's whether or not it's taken a long rally. Think about exhaustion. And this is why we use the elastic band theory. And we use ADR. If you hit a big round number at ADR after the market has stretched to push hard to get to that level, you are not going to have many buyers left when you reach that level. Therefore, the limit orders that trigger at that level are likely to win. However, if you move to that level like this and you get to it there, yeah, there's a lot of buyers in the market because the market's been rallying towards it. It hasn't had to stretch to get to it. It's not beyond its average daily range. So there's plenty of power to break the level. So you'll often find that big round numbers, the reaction you get. So if we hit 1600 now, today, I would say that will hold. Because look at the amount of buying we had yesterday. We've gapped up and run. Yeah. The buyers have been buying now for 24 hours, basically. There's a lot less buyers now than there was this time yesterday. So by the time we hit those limit orders, there's going to be a lot more sellers sitting there. So it's likely where we're going to start the pullback. But what will probably happen is we'll pull back into propulsion and then drive away and have a second run up. This is why you've probably heard me say it before in here. One of my old mentors used to use an analogy at support and resistance. If you can knock on the door 3 times, 4th time you're going to get through. Yeah. So we often hit a level, reject it, have another run up, reject it, double top, third test on a double top. Very rare you'll see a triple top because we want to get through that level. We will get through it because there's enough. You think of it like an army. You got 100 sellers here. They win, but during that they lose 50 of them. So you got 50 left. They run up at them again. Second battle, you lose another 25. You lose 50% of your army again. By the time you get here, we've rallied another 100 troops. You're dead. Bang. That's how the market works. Number of buyers, number of sellers. If that is bigger than that, that wins. Just simple maths. So that's how the market moves. So, but yeah, big round numbers. Definitely, you will find a reaction there, whether or not the reaction holds or not. Baggy, you decided not to trade the FTSE? No, the only reason I was trading the FTSE was because I was with that prop firm that allowed me to trade the FTSE. I don't have the FTSE on Robo Forex, so I don't trade it. And I don't like it. I traded it for a week and I lost every day. It's too slow. The FTSE is like a slug. You think the DAX is slow compared to the NASDAQ and things like that? The FTSE is just like a slug. It's awful. I just don't get on with it. I can't, it doesn't move. It's an absolute slug. Outside bar just gone in on the DAX. Total indecision this morning. This thing doesn't know where the hell it's going. So good luck with that if you're still in it. Looks like we might be putting a structure in long though. So we've got a low, a high, a higher low. So if we can get a higher high in there, there's your market structure. It could turn into a nice trend day, but it's going to be one of those big trend days that stops you out all the time. Not much fun. Discretionary traders make more money than algo traders. Would be keen to get more thoughts on this. Well, algos are stupid. Who makes more money in this world? Intelligent people or stupid people? Simple question. Obvious answer. Yeah. Why did I make... Where's my chart gone? Okay. Why did I just make $1,500 this morning? because I could identify something that you could teach an EA to do it, but there's 1,000 things you can teach an EA to do. There's 1,000 things this market can do. You get a feeling for stuff. Yeah. So if you're trading automated here, yeah, you would still be in this long pre-market. And if this now breaks, I made the wrong decision this morning. Yeah. But if this now breaks up and hits my target and then pulls back down and gets me out at break even, the difference in what I've made there and what I would have made is going to be roughly double. Am I happy with that? Yes. The reason I love EAs is because they help me to automate my life. But the problem with every strategy that is automated is it's all based on a load of crap. Yeah. Because everything you do in strategy development is based on historical data that will never repeat itself. So everything you can do in a backtest gives you a rough idea of what would have happened in the past if you'd have done X, Y, and Z. This candle that's happening today in this hour on the DAX has never happened before, ever, in the history of the DAX. In this order, yeah? The measurement of that candle and the measurement of that candle at this price point hasn't happened before. There's no EA on the planet that can tell you what's going to happen next. But you can see when things are happening as a human being repeating themselves over and over again that an EA just can't do. So as a human, I'm looking at this now and I know this is a mess today. I can see it's a mess because you've got outside bars everywhere, you've got wicks at resistance levels everywhere. There's no direction. The EA is just going to sit here and go, I'm waiting to get to 2R. If I don't get to 2R, I will stop out at this level. Because it's stupid. But it's necessary because I, as a human being, will find it very difficult to execute all the orders and place everything and put the stops in place and calculate the lot sizes and do everything I need to do in that 1.5 seconds I've got to get the orders on. That's what you use EAs for. And to automate the boring stuff, like trail my stop for me, 1R when we got to 2R, because I can't be asked. That's what you use EAs for. Yeah. And to prove strategy. Yeah. So you can prove strategy like I'm doing here. Yeah. I'm proving the strategy works. Yeah. All of these system parameters, 1,200 system parameter permutation tests being done here. They all are profitable. Not every one of them, most of them are profitable. Which one are you going to use? Doesn't matter, because none of this is ever going to happen again. But it gives you an idea of whatever you had done in the past, it always works. So whatever you do in the future is highly likely to always work. There isn't one of these that you should pick, though. You should pick something. All of it works, yeah? That's all that EA's testing can tell you. It can give you a robustness test, but that's what forward testing is about, is finding out, okay, that's what used to work. What's going to work now? What worked before COVID doesn't work after COVID. What works in a bull calm market doesn't work in a bear volatile market. What works in a range doesn't work in a trend. What works as a mean reversion doesn't work in a trend. You need to identify what's going on in the markets. Hopefully that explains. That's my thoughts on discretionary trading. Anyway, I don't think there's anybody out there that can have a mechanical system. Yeah, all these people that sell on these adverts, I've got a mechanical system, and every trader has passed the evaluation on a prop firm using my mechanical system. No, they haven't. What they've done is they've used your mechanical system as a basis, but they've made decisions along the way because that's how you trade. Mechanical systems sell courses. So I don't even know the guy's name in the advert, but I just can't stand his advert. Morning, Jeffrey. Tony even. Quick question. When looking at stock heat maps, DAX, for an indication of strength, is it worth looking at the 1 hour, 4 hour heat map? I don't know. I don't look at heat maps. Never use them. Do you mean things like Bookmap or Jigsaw? Well, you can't get that data on the DAX. I mean, you probably could, but no. I mean, it's useful for identifying levels of support and resistance. But you will find, I mean, it's a totally different strategy. But you will find that those heat maps, as you know, Bookmap and Jigsaw, when they paint those lines in, you don't know whether they're spoof orders or not. And also, it doesn't tell you what volume of buyers you've got when you hit that level. And you will find if you transfer this heat map onto a candlestick chart, it will become a previous resistance, because that's where they place their limit orders, at areas of previous movement. So all this does is confirm for you that, yes, there are orders sitting at that level. I know there are. There always is. It's kind of teaching you the obvious. That's what I found with Jigsaw. I love Jigsaw. I used it a lot in futures. But I found it didn't help me, because I was just confirming what I knew. There's orders there. I know there's orders there because it came from that level. That's why the orders are there. You know what I mean? It's just the ones to see if stocks are up or down. Oh, those blocks. I've never used them. Yeah, never used heat mapping. Heat mapping is, in my opinion, the same as this. Yeah, currency strength meters. They're as useless as a chocolate fire guard. Useful as a chocolate fire guard. And that's the way I feel about heat maps. Because what does this tell you? For example, today, it tells you that the Australian dollar and the New Zealand dollar are the strongest currencies. And the weakest currency at the moment is the Japanese yen. Yeah, I know that. I know that before that chart was published. How? Because if you look at the Australian pairs, they've gone up. If you look at the yen pairs, not that one because it's a CAD yen, but sorry, yeah. If you look at the yen pairs, they've all gone up because the yen is weak. If the yen is weak, everything goes up against it. Yeah. So what's this telling me? What I can see on my chart. The candlesticks have gone up. Therefore, I know they're strong. A heat map will show me there's a load of stock movement to the upside in the tech sector. I know that. The NASDAQ's going up. How does that help you? It tells you what's happened. It's the same as any indicator on the planet. This is an indicator. Heat maps are an indicator. Moving averages are an indicator. Market reverse alerts is an indicator. What are they telling you? What's just happened? How does that help me predict the future? If stocks have just gone up, do you want to buy them? I don't know. What's the chances of it going up from the level that you've just seen? 50-50. Could come down because it's gone up. Could continue to go up because it's gone up. How does it help you? So, I mean, nothing helps you in this industry, because the only way to make money in this industry is to predict the future. You can't do that. So what you have to do is just get into the market and hope it goes the way you want it to, and get out with a risk-reward profile that makes you money. Personally, I just never found a use for it. Muller, rates are high enough to bring inflation back to 2%. No further rate hikes are expected in the coming months. Goodbye, euro. That's not good news, is it? That isn't what Lagarde said yesterday, but it's along the lines, isn't it? So we'll see what impact that has on the euro this morning. Not good. US dollar yen, if weekly closes above blah, 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 highest in over 20 years. Yeah. No, that's not right. No, Les, you're wrong there. US dollar yen has been to 150 in September last year. Yeah, 148.75 is here. US dollar yen was at 152 at the intervention point last October. Maybe you're looking at a different chart. Morning, Daniel. For me, the strength of the hedge ORB EA is getting me into the trade and not worrying about being stopped out for a loss at the open. Have time to read the price action. Exactly, yeah. Exactly what it's for. Helps you basically just relax into the trade. Maybe one sec. Right. Let's do some analysis, shall we? Don't get me wrong. If heat mapping makes sense to you and you find a use for it, use it. If currency strength meters help you, use them. But at the end of the day, they are just telling you what's happened. So if, but it's the same as my, the reversal indicator. I built this indicator to help people identify market structure breaks. Yeah. Yeah. So the reason this is here is to show you when the buyers have taken control of the market. Yeah. I can see that, but other, people can't see that. People struggle to draw in support and resistance. So my indicator does that. I can do it. But everybody's at a different stage in training and in trading, and everybody's got different skills and different weaknesses. So you use indicators to help you with what you need to see. Everybody needs to see something different. No one's going to be able to do the same thing in the same way all the time. So use what makes sense to you, but just understand that everything you put on a chart or you look at is telling you historical information or up-to-date information, which doesn't help you make future decisions. It can help you in the respect of when this gets extended, I know I want to long it. And when this gives a reversal alert, I know that it's time to long it, but it's only telling me what's happened, which I can see on the chart. The price has come down. And it's only telling me what's happened. The price has gone up. Yeah. So that's all that you'll ever get from an indicator in reality is knowing what's just happened, confirming it. And this is why we, use the dashboards. So I don't have to constantly watch 28 charts for something that's getting extended. I can just wait for this to ping up and go, this is extended, and then look at it. But I know it's telling me what's already happened. It's just telling me now I want to have a look at it to see if I fancy it. That's just basically the way it all works. Sorry, bear with me a sec. I've just got something else I'm handling over here. Right, carry on. CAD Swiss, currently in DD control for ADR hits. So I've just got one on this CAD Swiss at the moment. I'm guessing you would have entered, if you're in this already, here and didn't get out on that. Or maybe, if you entered there, you wouldn't be doing drawdown control yet because it's hardly gone anywhere. So that must have been an entry maybe. So I've just got the one on the CAD Swiss at the moment, which was taken yesterday on the extension. Target is propulsion. Whoops, done that. Right, I will get through these RSIs. They'll all have changed by the time I look at them, won't they? RSI extension on the Aussie Swiss just got extended. Not enough for me. It's coming off of ADR as well. So that ADR reversal we looked at this morning. There you go. So there's your M pattern. That was your reversal. There's your M pattern. Off we go. That's also extended on the 4 hour. So the 4 hour extension is above the 75 level. Not quite above the 80, which is ideal for 4 hour. But yeah, nice push up on the Aussie dollar at the moment. That Swiss franc weakening off the back of the euro news. So we will see where we go from there. But that's a nice rally there to get a pullback on. And possibly we're going to get a complete pullback on that back into these highs. So looking at 125 ADR to the downside on that Aussie Swiss. Potentially. Aussie dollar yen. So all the yen pairs are reliant on what happens with the US dollar yen next. If the US dollar does get decent news this afternoon and moves up on the Michigan news, and it breaks that level that we recently hit. So if we break back out of this high, the Japanese are going to start to get concerned and start talking about intervention again. So anything you look at with the yen, if it is pushing, I happily will get into it short, because if that US dollar continues to go and that yen continues to weaken, these will all continue to push, but at some point that Japanese intervention will drive this back down again. So Aussie dollar yen, nice 4-hour RSI extension. We're just about to get extended over the 80 level as well. That's just about to alert when the candle closes in an hour. So yeah, good extension, RSI extension. We've just, ADR extension. We've just filled a propulsion gap and we've got a really close monthly support, which was a double top. So that's an old double top. So what I was talking about earlier, when you hit a level multiple times and then it breaks, that if it hits it again after such a long time, that's not the third run up. Yeah, what I'm talking about when you hit resistance 3 times is you hit it, you break it. Not you hit it, you come down, you do something else, and then you come back to it at a later stage. That's resistance. So, yeah, good potential drop from that resistance when we get there. It's extended on the hourly as well. CAD Swiss is extended on the 4-hour. Got one on that. That's one we just looked at, isn't it? So yeah, 4-hour RSI extension. I've drawn a level in there for some reason. Oh yeah, so this was what we were looking at the other day. So I said, when we get to this accumulation, watch this accumulation for a bounce. We've tapped straight into that accumulation and bounced. So it's whether or not now we can get that reversal started. So this is the area I was looking at, which is just before this propulsion move. So we've got a couple of other little accumulation levels where we're going to find some sells. This is the first one. Potentially we might pull back down into that area or just accumulate around this area and then continue up. But big, strong push, needs a kind of pullback, I think. So like the look of that one short, the CAD Swiss. However, oil is still rallying. So as long as this oil is rallying, this Canadian dollar is going to be strong. So you've got to be a bit careful with the CAD at the moment. Swiss franc obviously weakening off the euro, but we still don't know what's going to happen with that euro. So it could all go back the other way today. We will see what happens this afternoon. Right, CAD Swiss, Euro odd. So first of the euros. So obviously we know we had that big catastrophic drop on the euro. I've got 2 positions on Euro odd long at the moment. This is a 4-hour extension. We're nearly down at the 20 level. Last time we got down to the extensions, obviously we got a lovely move off of that one. But this one, all we got was an accumulation and didn't go anywhere at all. So we were looking for basically that continuation on the trend on the Euro odd. Bouncing out the 24.72 zone, as we always do in trends, but we didn't get it that time. And we were looking for the 72 bounce. We didn't get it. We've broken it. So we're looking next for support. So there's multiple levels coming up on this one, 150 down to 250 ADR. So if this does continue to weaken this euro, we're probably going to find ourselves coming back down to somewhere like this, and then we'll get some kind of pullback off of it. Then obviously, potentially, we could have a continuation weakness on this euro. So don't mind being in it long. I get the feeling we might get a V-shaped recovery on this euro move. After what's been said this morning, though, Muller is not helping. Look at that. No further rate hikes are expected in the coming months. Rates are enough to bring inflation back to 2%. Higher inflation could yet warrant a rate hike. I'm going to completely undo what I just said, because I've been talking and Lagarde is in the back of my ear going, shut up. That's not what I said yesterday. We might still hike the heights. Hike the rates. So yeah, complete reversal of what I just said. There you go. That's how stupid this market is at the minute. Anyway, I think that's probably going to undo itself. So Euro odd, good looking long opportunity. That's also extended on the hourly. We got really nice extension on the hourly. So first entry, second entry, average, pretty much back to break even. Any movement up into this propulsion gap gets me out. Let me just do. That's 150. It's just over. It's over 125 ADR. I think that's probably going to be pushing it today. But these V-shaped recoveries, when they happen, they do just happen very, very quick. So if it is going to be, and it looks like it is at the moment, trying to, it's going to be a quick move up into there. So I'm going to put that 125. I'll reevaluate this at end of day and see where we are, or during the day, basically. Euro CAD, hourly RSI extension. First entry taken on that one yesterday. 4-hour RSI extension as well. Very nice support level. We're just coming off of a monthly. Whoa, too far. So we're coming off of this monthly low here. And we've also got 2 further support levels coming up at ADR and 125 ADR. So if this does just do a little accumulation or tiny little flag and then break down, we've got 2 more support levels there to hopefully get some limits or some stop orders triggering off to drive us back up. Again, if this euro move isn't what it should be, then we're going to get a V-shaped recovery anyway. Yeah. It happened all the time. Big drop, completely undone within 24 hours. Yeah, so very much on the cards. Euro New Zealand, same thing. That's a 4-hour RSI extension at 72. So again, this is potentially a 24.72 bounce. Next leg up. However, this is a fundamental. We know that the euro rates went up yesterday. That should be bullish euro. The market collapsed on it. Forward guidance wasn't particularly rosy, so this could be the start of a drop. However, the euro could rally off the back of this. We've got New Zealand dollar news coming up in the next couple of weeks, as well as Australian dollar. So there could be a big change on the Australasian side, which will basically weaken that, and the euro will then take advantage. No idea what's going to happen because nobody knows what's happening with rates at the moment fully. So looks like a good bounce point. If it doesn't work out, you've got another monthly support and another monthly support. Yeah, so those would be where you would be looking to scale in and get bounces from. Euro US dollar ended on the 4-hour. I've got a couple of positions on this one. So I took one yesterday. I took one 2 weeks ago. 2 weeks ago? No, it's roughly a week and a bit ago. I was going to stop out on this yesterday and I didn't. I should have done, obviously, but I didn't. I took a manual on it. And then the EA took another one. So I've got a little bit more exposure than I want on this one. I've got 3 positions on, but those 2 are too close together. The reason I took that one yesterday was because we'd pushed down pretty much an ADR or 3/4 of an ADR. And I wanted to make sure I got a trade on at that level because the EA had no chance because the move was so fast. There was the reverse alert was up here somewhere. We were down here. So I needed to take a manual. We then chopped around for a little bit for an hour and the EA, or 2 or 3 hours actually, and the EA managed to get in a position on. So I'm overexposed on it down here. So if we can push up into there, happy days, I'll be out of all the positions, which is roughly 125 ADR. So I've got TPs there. But what I will do is if we hit ADR today, I will break even stop my position just to make sure that I don't, if it does drop, obviously, I don't want 2 positions off or on high up in my position if it's going to continue to go down. So I'll deal with that second position myself. CAD Yen, RSI extension. That is Euro US dollar. So potentially a V-shaped recovery forming on that one. Obviously, US dollar this afternoon. Negative news on that will be popping anyway. So pound odd. Extension, big extension. This pound's in real trouble at the moment. So first entry taken on that one this morning. So Lenart, if you're in here, Lenart contacted me yesterday to say that the market reversal alerts EA did not take a trade on the H1M5 mean reversion on the pound odd because we were extended here yesterday. And we had a reversal alert in here. I think we hadn't got a closed candle there. Therefore, the EA did not have that reading when the reverse alert happened. I think the reverse alert happened just before the extension on RSI was recorded, which is why the EA didn't take a trade. It has taken it this morning on that one, though. So, Lenart, if you're in here, we're in. So long on that. Nice extension on the RSI. Looking for a pullback. Obvious spots will be in propulsion. That's enough for me, 125 ADR. So that low is what I would look for. Potential continuation moves to the downside. So it's these propulsion gaps. So I'm in the middle there, just below there, but somewhere around here. Aim to get out. That was an hourly extension, which isn't anymore. 4 hour, you are really extended on that. So 4 hour move. Same place, basically. If we're going to use support resistance for a bounce, somewhere around here is where you're going to get another leg down, if that's going to happen. Yeah. Unsurprised. I'm shocked as to how weak this pound is off the back of the news that we've had. But I'm also not surprised because Bailey has been very, very, very quiet. Usually when we get some news about interest rates and things, Bailey comes out and reassures the market. He hasn't been doing that for the last couple of months. And I'm not quite sure exactly why, but we're not getting any help really from Bailey to rally the market when we get these drops coming. So it's a bit of a tricky one at the minute with the pound. I'm not sure whether it's bullish or bearish. We are talking now about one more rate hike and then freezing. We were talking about 3 more rate hikes last month. So it completely changed its mind. So pound odd, nicely extended on the 4 hour, ready for an entry. And obviously the pound, the hourly was extended yesterday, so I got into that one. Pound CAD, same thing in that one as well. Target just under that monthly support, which is that wick in that propulsion gap. So there's your 4 hour RSI extension. M5 or M15 reverse alert has already triggered. Nice tight one there. So there's the entry. There's the reversal alert. Just about to see it. So looking for a push up. And I will get out before that resistance. Pound New Zealand. That is an extension on the 4 hour. That's already reversed. So that's just below the 25 level, the pound New Zealand. That's a nice bounce point, 24.72. Yeah, in a trend, we use the 24 and the 72 for retracement. Well, we have the 24 and the 72s on there. So the 24 pushed and failed. This is the 72 bounce, which is also previous resistance, which will turn into support for next leg up. However, we need some reassurance on this pound that there is another rate hike coming. If you look at when that's coming, it's next week, isn't it? So CPI is on Wednesday. Pound is Thursday next week. Yeah, so we are a 5.25. We are forecasting, I think, a 5.5. I don't think we get more than that. But this could well be terminal rate. So this could have the same impact as we had on the euro yesterday. We go up to 5.5 and the market goes, is that the end? And they go, yeah, oh, don't want it anymore. We're only interested when interest rates are going up because we're going to continuously make loads and loads and loads of money. If you're not putting interest rates up anymore, I don't want more money with you because you're going to make me less. The way it works. Very simple. So that bounce potentially could be shaky next week. So right now it's a perfect 72 bounce, but we could just find it do that. New Zealand got a Swiss 4 hour RSI extension. That's already played. You've missed it. So that was extended yesterday as well. So you would have been on 5 minute reversal alerts on this. You will. CAD Yen weekly range just hit. So there's your reversal alert this morning. Nice, clean, out the highs off. You've missed it. And US dollar CAD 4 hour. So I'm in sells on this at the moment. Been in this for, again, since July. This August is, and the beginning of September has just been pain. Just nothing's moved enough. And it's all slightly ground in the wrong way most of the time. So drawdown control's just been killing me this last 6 weeks. But you get periods like this. There's nothing you can do about it. Potentially, we are bouncing at support here. So the movement on this is going to come this afternoon with the two news events at 1:30 and 2:30 and 3 o'clock. So depending on what we get news-wise, if we get a negative and a negative, obviously we should get a move back down, and that will be testing then the 72 area around about ADR. If we get down to there, I will probably exit this because I've made a really nice amount of money on the shorts. They've paid basically for most of the longs on this. So when you've got into something for 6 weeks, don't forget the idea of position trading is not to make money on every trade. It's to not lose money very often. So if I can get out of this and lose 0.25%, that's job done, isn't it? Most traders will have been shorting the crap out of this and lost 20% of their account. If I can get out of this with 0.5% loss or something, it's job done. So I don't think we'll get a catastrophic drop on the US dollar today. You never know what's going to happen. But if it does get down to ADR on negative news, that's fine. If it does push up on positive news, I will add another position back on where I took it off there. And there's one up there that I took off. So, it will just keep scaling into it. But it's extended at the moment to the downside. So what I'd like to see is maybe an accumulation and then RSI reset so it can take another leg down, but we'll see. So there's your RSIs. There's plenty of them, plenty of opportunities. As you can see, I've got loads of exposure on at last. It's been so hard getting positions on, but yesterday stuff started to trigger. So I've got 1% loss to get back. So I'll look at basically banking stuff today as and when, and just try and build that back up again, but tough month at the minute. Let's have a quick look at the DAX. Ooh, wrong chart. So DAX has not really made any headway. So that was the break, obviously, the pre-market 15. There's your 5-minute ORB. So if you've got the 5-minute ORB long or the 15-minute ORB long, you're pretty much where we were when I stopped trading this 15, 20 minutes into the session. Not going anywhere today. It's a grind fest. Right. Let's catch up on the chat. Morning, Shroud. EA, my EA took it on Forex this morning. Yep. Yeah, me too. AIM, is propulsion gap like FBG? I don't know. I don't know really what the official definition of an FBG is, but a propulsion gap is right. So everything is like everything. Yeah. If you want to know more about why you're calling it an FBG and why I'm calling it a propulsion gap, go and watch this video on the website. There. Yeah. You are being sold the same thing over and over and over and over again. Go and watch that video. Whatever you call it, I don't care what you call it. It's a big candle. That candle there is a big candle. And when that big candle pushed down, it meant there's a lot of sellers entering the market. After those sellers entered the market, they continued selling, which meant that there was a whacking great void where there was nobody buying. It's a propulsion move, impulse move. Wide-ranged bar, big-bodied candle, strong closed candle, propulsion gap, fair value gap, I don't know. It's a whacking great big candle, yeah? They've been around since the Japanese invented candlesticks in the 1900s. Or whenever 1800, whenever it was, they invented them. I don't care what you call them. It's a load of sell orders in the market. Every time somebody tells you it's called something different, they're selling you a course. Go and watch that video, right? These were originally designated as wide-range bars by M.A. Perry in the 1980s. Other people have come along and called them different things. One of my mentors on Forex Factory called them impulse moves because he was an Elliott wave trader and they use impulse candles. Somebody else told me they were called propulsion candles. Then I watched some videos on ICT and he had something similar and he called it an FBG. Big move in the market. This indicator draws them. How they're drawn, what the official designation is, the rules in making one appear, I don't know. For me, every time the candle moves big, I want to know about it because I know that somebody's entered a market order. When there's a big order gone in the market by a bank, I want to know about it because if we don't go back to it straight away, we will be at some point. That's all it is. There. Big order. You look at the market. Yeah. There's a load of big orders here. There's a big order there. The market came back to it. It left a big order and came back to it. There's a big order there. There's a big order, there's just big orders everywhere and the market comes back to these big orders. Yeah, so they're magnets. So market's going to go back to there at some point. There's this big one down here it came back to and tested and they bought it again. This is a really crappy chart, isn't it? Because there's not many on there. So yeah, call it what you like. Yeah, it's coming back up to here. 90% sure. Probably going to come back up there as well at some point, but it'll be up there either today, tomorrow, or next week, or in a couple of weeks' time. I don't know when. You can't time it, but that will be there. That's what it is. I took a short on the US 30, waiting how it develops. SP 500 VIX is quite low. Moreover, today is Friday. I expect profit taking today and downside move before the Fed. You seem to have everything very organized, Roman. Although you are trading completely the wrong indices at the wrong time of day. However, good luck shorting it. Not sure when you posted that, but it's not going well at the minute, is it? Yeah, I realize the EA waits for 1 hour close at 25.75 and then reads the 5-minute reversal. Is there any way to let it know? No. Basically, the market reverse alerts EA takes trades when the market is extended. If the market gets extended, triggers an RSI extension, and then comes back and doesn't trigger an RSI extension, it's not extended anymore. So it doesn't work that way. There's 1,000 ways to do everything. Mine does not work that way. I have always been taught my entire life, you only ever take trades on candle close, because at 3 minutes before an hourly candle close, it can look like that. And you're thinking, oh, this is a massive sell. 1 minute before, it ends up looking like that. And you're like, crap, there's a lot of buyers in the market. So I take my information from a close of candle. RSI dashboard operates on candle close. Market reverse alerts EA operates on candle close. The reading on the RSI will go like that all hour. And then it will pick a spot to close. I'm not interested in what it's doing during that hour. I'm interested in, are we stretched? Have we got above this RSI level and closed above it? The market wants to be stretched. If we get a reversal alert when we're teetering around this area, I'm not interested, because we could teeter around this area and then teeter up and teeter up and teeter up. That's where I'm going to be interested in it, when we are really stretched. Yeah. So that's why everything I do works on candle close. Because what something looks like right now, this Dow at 9:14 looks like an indecision doji candle. Yeah. At 10 o'clock, it could look like that. In which case you're going, I'm selling this today. Yeah. But right now, it's looking like there's no buyer or seller advantage. Yeah. I'm not interested right now. This is why you find, I said yesterday, remember? I can't remember which session it was. I was watching the chart over there out the corner of my eye, and suddenly it was stopped and went, there's a load of volume just come in, something's happening. And then I looked at the clock and I was like, oh, don't worry, it's just the hourly candle close. Because there's a flurry of orders come in just before the close of the candle and just after the open of the candle, because a lot of strategies, traders, and EAs work on hourly candles. So you get a lot of volume coming towards the end of it. So if you've got a candle that's just about to close bearish, a few minutes before that, there's a load of flurry of orders coming. That changes the outlook of that candle. That's why the EAs all run on candle close. They don't run during candles, which is why you get questions like this that Lennart said to me. I don't know if are you Lennart? One of you, Lennart? I don't know. Everybody's got different names in everywhere. But why is the EA not taking a trade on the pound odd yesterday? Because yesterday, the conditions weren't right. So we weren't extended when the reverse alert hit, and then it managed to get extended after the reversal alert, and we didn't break a new low, and then we pushed up, and then the RSI got extended above. The conditions were just not spot on 100%. But I'm more interested in taking things when they are big extended underneath these levels, not floating around them, because that kind of thing can happen. But this time it did. Yeah, you know, it's the flip of the coin thing, isn't it? Sometimes it will, sometimes it won't. You'll go, oh, I really wanted to take that one. And other times you go, oh, I wish I hadn't have taken that one. Some you win, some you lose, basically. You can't have it every way, unfortunately. Did you ever come across broadening formations? Yes. So broadening formations or expanding wedges are very hard to trade. You find them sometimes in indices. So today on the DAX, if today on the DAX we go down to here and then we come back up into here, that would become what's called a broadening formation. Very difficult to trade. So what you're seeing in a broadening formation on a lower time frame, on a higher time frame, you are seeing continuous outside bars painted. So on the 5-minute chart, if that plays out, just trying to see if I can find one, but no, if that plays out on the 15-minute chart, or rather the hourly chart or the 30-minute chart, what you'll find is a candlestick that looks a bit like that, and then a candlestick that looks something like that, maybe, and then a candlestick that looks something like that, maybe. Yeah, but it's an expanding market, which is basically indecision. It's the same as a range or an accumulation in the fact that there is no directional bias. There's no directional bias. We've got equal amounts of let's try and trade up here as we have equal amounts of let's try and trade down here, and equal amounts of we're not letting either of you do either of those. At some point, that broadening formation will stop and typically go into a range. But while it's underway, and the reason they're difficult to trade is when you get down to here, you don't spot a broadening formation until you've got multiple points. You need at least 3 points to assume that you're going to get a fourth. So if you were to take a long bounce on that, you would target somewhere there if you're going to get a broadening formation. The trouble is, we quite often find they turn into ranges, which means you get a double top. So you go, I'm going to take a short there, and you never get there. So it's just a formation in the chart which is indecision. And it kind of is an accelerating market. It gets faster and faster as it gets broader and broader. But it's outside bars. They're really dangerous for breakout traders, obviously. Because as we break out, what do? Pull back. And then we've got our stop under that low. So what does it do? Take out our stop. Yeah, it's a rotation day, basically. And they're hideous for breakout traders because you just get stopped out over and over and over again. Great for mean reversion traders because you just get money after money after money after money. So broadening formations, you want to trade as mean reversion. Trouble is, until when you've spotted a broadening formation, you've missed two of the mean reversion opportunities. Typically, the next one is the one that fails. But that's the way trading goes, isn't it? That's why we're not all millionaires. I've just drawn a rocket under GU. Good man. Somebody's got it. Oh, I've just... that should be on the DAX. I'm on the wrong chart. We're getting there. We've got the reversal and we've had the retest. So we are legging up. We just got so much resistance potentially in here for the last 4 days. I think we might find a bit of strength in there. We'll see. Thoughts on trading the ORB hedge set file on prop? Yeah, can do. It's a strategy. You trade anything on prop, can't you? The nice thing about... sorry, what's that? The nice thing about obviously the hedging strategy is you are locking in a loss. No idea what this is set up to do. So I'll just see what it does. But no, that's right. So your risk parameters, if we get a hedge, there we go. So we're hedged. So your risk parameters are never going to get worse than the hedge. So when you take this trade, obviously you are guaranteed to lose right now $576. So that's your loss. So for staying inside loss parameters on prop firms, absolutely brilliant. And when you push down and get your target hit down here, right, you're going to make whatever on that trade. Let's see if this one does it. I don't know what time. What's this? July. I have no idea what this will do. So there you go. So we lost 576. So that's for your session done. So you've lost 576. If you've got a 100K account that you're trading, which has got a $5,000 a day drawdown limit, you've done 500 of it. Fantastic. You can't lose more than that. That's the beauty of it. See what happens the next session. Hedged again. Another loss, $536. There we go. So 2 trades, 2 losses, absolutely fine. This one, another hedge. God, this is a bad period, isn't it? Another loss, $513. There you go. So you see what I mean? It's nice because as a trader, if you're using a stop loss based strategy in prop, which you've got to do really, if you're scalping, every time you get a stop out, you're losing 0.5 or 1% of your account. That's where people get killed. Trying to trade rotation days like this, those are the days you need to lock this loss in and stop trading because you're going to get murdered in it. You're going to blow your account. You're going to overtrade. You're going to get absolutely slaughtered. Hedged again. I just want to see if one gets to target. There we go. So target hit, banked 2,000, right? So we've lost 1,500. We've just banked 2K. I'm now looking for a $500 move to get me out of this. No idea what this is going to do. That was a loss. So that was a 2,690 loss. So these are the days on prop where you're going to get hurt. But this is why I'm doing all the testing to find out which of these is not the ones to take. Actually, this is the period I've specifically selected because I wanted to test multiple losses in a row. This is why I'm testing this. It's probably not the best one to show you, is it? But this is what I wanted to test. I wanted to see why these losses were occurring and what formations were causing them. So there you go. There's a profit day. So that was $300 odd. Again, all my testing is showing that actually a 2R exit and a 5R runner is not the best thing to do. The best thing to do is take it all off at 2R or go for a 2R 3R or a 2R 4R. That's much more profitable than trying to get a big runner because we don't get that many trend days like that. We get a lot of days that go like that. So you're actually better off getting out faster than trying to go for almost an ADR move. But again, I'll show you the results when I've got them all published. But yeah, so that's, for prop, it's good at controlling your risk. There you go. There's another target hit. There's a target exit. So that was a loss recovery in action. We went short and long. We took off the TP there. The pending order triggered on the short, which got us out in a profit for the day. This is what happens the vast majority of the days you get hedged. These ones we've gone through loads of losses in a row. The reason I've got this set at this time is because I was trying to find a loss run to analyze, basically. So because I did it yesterday in the live room, I took loads of screenshots of all the loss runs, and I've got an export that gives all the data of how many days get hedged as opposed to how many hit ADR. All the data is exported on all of this, so I can analyze it. But yeah, so there's a nice quick short run straight down to TP. There you go. So you see what I mean? Getting out at a 2R and a 3R happens a lot more than getting out at a 2R and a 5R. So there we took a 2R and a 1.5R. We banked $500. Yeah, and don't forget, this is just one session. We've got 4 of these we can do, or 5 if you want to trade the FTSE. There's a hedge. That one's going to end up as a loss recovery day. So net on that, $350. That's a straight TP day with runner, $939. That was no trade because the ranges were too wide. Nasty hedge. See, this is what I mean. Days like this, as a discretionary trader, days like this, I am seeing a break going, woohoo, that was a lovely break. But look at the size of it. It's a biggie. We got to go a long way to get to our target. So days like this are akin to what we've had this morning. I will see this and I will go, Christ, this is struggling. We've been sitting sideways for 15 minutes and we can't get anywhere. We've pushed. Now we've sat sideways for half an hour. Pushed. We're an hour and a half into the market. We haven't made 2R. I'm going to protect this. That's what I would do as a trader because I'm seeing this market really struggling, yeah? Like it was this morning. This is where you come in. If you get a day where you go sideways for 5, 10, 15, 20, 25, 30, 35, 40 minutes, and it takes 40 minutes of you watching this thing to break a high, for that high to immediately fail, that is your, this isn't working today, get out with whatever that would be. $600 probably, something like that, on whatever risk profile this is running, yeah? This is what I mean about automation. The testing I'm doing is going to show me what's the best case scenario for set it, forget it, and most of the time, if you do this, this will work. That is what is hopefully going to happen most of the time. So I'm looking for the most of the time scenario, what falls in that bell curve that makes profit the most of the time. There are times where I'm going to override that to make myself money when I'm not being stupid, yeah? An hour and a half into the session, if you haven't got to 2R, an hour and a half into the session, you ain't getting there. It's either a break or it's not. This is not a break. It's a stall. So you don't get hedged on these days. These losses you've locked in, you're not going to achieve them because you're going to be getting out of them. Well, I am anyway because I'm watching the thing run. But if you want to set and forget and work it on prop, there will be set files that are going to have much more chance of succeeding on prop than others. But there is no one. Like I said, you know, there's 1,200 tests going on here. These are all profitable. 1,200 variations of the parameters. They're all profitable, all of them. Yeah, I can't tell you which one to use. Same as with the ORB, I couldn't tell you which one to use. They all work. They all make a lot of money. Yeah. But at the end of the day, you're not going to get those results. You're going to get something different, but similar. But if you're good and spend the time, you're going to get a hell of a lot more. You know, let's say DAX today. DAX today is a prime example, isn't it? Look, what are you going to do? This dotted line here that's just been drawn is an hour and a half in, right? If you took the pre-market break today, you're an hour and a half in. What are you going to do now? You're going to sit here and hope? Or you're just going to go, screw this, I'm going to take dog for a walk and bank X, as I did after 20 minutes because I identified this ain't working today. Yeah, the EA is still in it right now. If you've taken the opening range breakout EA and you are using the opening range breakout EA, you are still in this trade. Do you want to stay in it? It's a question for you. The EA can't answer it because the EA can't be made that clever. AI, you can, everything you do with EAs, you have to give it a set of rules. I can give it 100 sets of rules for 100 scenarios, but what does it do? How do you teach it to pick each one? When you see 3 up wicks in a row, exit the trade. Was that the right move to make today? No. So I'm not going to give it that rule. But that rule's actually quite good, isn't it? Because a lot of the time it will do that. So on the days it does that, it's a good rule. On the days it does that, it's a bad rule. It can't predict the future. Just because 3 things happen in a row doesn't mean the next candle is going to be bearish. Case in point. So whatever rules you give anything, those rules are just rules which have a 50-50 chance of being correct on the next candlestick which is painted. So, you know, for prop, like I keep saying, you take a strategy and you try it on a Monday and you run it and you pass. If you trade it on a Tuesday, you run it, you pass. If you trade it on a Wednesday, you run it, you hit a bad spot the following week and you fail. If you'd have done it there and there, you passed evaluation. Same strategy, same rules, same risk, but because you started Wednesday, you failed. The only thing that makes a pass or a fail in prop is the day you start it and what happens in the market after you start your evaluation. Your strategy can be as robust and as good as you like. It's going to have a losing run. But the beauty of hedging is you are capping your upside. So if you want to pass fast on a prop firm, yeah, set your risk to 2% per trade. Yeah. And if you can get one trade, hit 2R, half your target's done, isn't it? Yeah. If that doesn't work out, at the end of the session, you're going to lose 2%. So then you could start the New York session in the afternoon and risk 1% on the remaining 3 indices. That's your 5% total for the day. If all 3 of those clean break, you've got all of that loss back and you've passed. Or you could be sensible and run everything with 0.5% risk and let the thing just do its thing. Yeah. But whether you pass or fail this afternoon in the New York session is nothing to do with this strategy, the strategy you're trading, or anything. It's to do with what the market does this afternoon. If it goes into rotation and you're playing breakouts, you're dead. If it goes into rotation and you're playing mean reversion, happy days. Because you'll be shorting that and longing that. If you're trading breakouts, you're not. Do you know what I mean? Market is different. Every candle, every day is different. There's nothing predicting it. You have to control risk. That's the only thing you can do. Sorry, that was a waffle. But there you go. There's your answer. What do I think of it on prop? As good as the opening range breakout. Different. Just a different. But I think this is more comfortable, much more comfortable. I call candles useless retail indicators. Exactly, Peter. Everybody's got a different view, haven't they? Some people think candlesticks are useless. Some people like me have sat in here now for 10 days straight and made $2,000 to $3,000 or more a day for 10 days straight using useless retail candlesticks. It's funny how they don't work, isn't it? Can we pick someone else to pick on? Because I've picked on Nirav and Greg Secker for months now. Surely there must be another advert. I've got an ad blocker on, so I don't see ads anymore. Surely there must be somebody else coming up on adverts that we can poke at in their training courses. You have to send me some on Telegram and I'll watch some of their adverts. Wow, what a slow grind on the DAX. Yeah, so get out. Franco, sorry, you've gone. You probably went ages ago. I've missed you. Andy, not posted for a while, but have been popping in now and again for a look regarding expanding wedges. Good rule of thumb is if the London session takes the Asian high and low range, it takes the low and high, New York expands. Yeah, that would make sense. So if you got the London, there is no London open, but whenever they decide to start moving the London market, if it goes into rotation, it's because there's no directional bias for the day. The guys in London hand over the book to New York. So it would make sense that New York might do the same thing. Okay. But then again, you say that, I will show you 100 cases where the London range went like that, and then New York had a trend today above ADR. Because as soon as that bell rings, it's different, isn't it? It's the same in all trading. Every setup, every chart pattern, every candlestick pattern, everything everybody ever talks about, and shows you 100 examples of it going perfect. I can show you, or you can find yourself 100 of examples of it not. Every time someone goes, "Hey, look at that beautiful head and shoulders," I will go, "Yeah, but have you seen that head and shoulders that did that?" "Oh no, that's not Head and Shoulders." "No, it was. It just failed." "Oh yeah, you only see the good stuff. Look at that beautiful symmetrical triangle break. Bang. Look at that symmetrical triangle that turned into a range. I didn't see that because it's just a range. It was a symmetrical triangle, but now it's a range. That was a symmetrical triangle that caused a breakout. Yeah. That London session turned into an expanding wedge. That London session turned into a massive ADR move. You know, it's random. This is random. Everything's random. But you've got to have a set of rules to work by. So use whatever set of rules works for you. You know, everybody's got to have a way to trade. All a system or a strategy is a mechanical set of rules to execute a trade. You've got to have a system or a strategy. Otherwise, you would never press the buy or the sell button, would you? And in fact, I've proven it many times. The old live rooms I used to run on on Zoom, before I moved on to YouTube, we had a game we used to play in there all the time, which was basically, market's really boring today. Somebody pick an instrument, somebody pick a time frame, and somebody toss a coin. And someone would pick a time frame, an instrument, and either it was heads to go long or tails to go short. And I would go to that instrument, go to that time frame, press the button, and we'd come back in the afternoon session and go, how's the trade gone? And it's either won or it hasn't won, and I'd DCA out of the position. Totally random. Somebody picked an instrument, someone else picked a time frame, someone else flipped a coin. Doesn't matter how you get in the market. You just have to wait for the market to move into the direction you want it to move into and extract the money. You have no control over which instrument to trade, what time frame to trade, or which direction to go. But you need a reason. And a coin flip is as good as any. A reversal alert is as good as any. A support resistance area is as good as any. It's what happens after you press the button. That's what makes you a profitable trader or a losing trader. This morning, right, this thing on the DAX here, if I hadn't have pressed that button there and that trailer hadn't have kicked in there and I hadn't have banked that, if this goes down to here, yeah, and then comes back up to here and sits there at midday, that would have been a 3K loss. Yeah. The reason I've banked that is nothing more than the fact that I pressed buttons. I have no clue where it's going. No one does, do they? Just the way of the world. Pound US dollar's not really getting anywhere. It's trying hard. With the ORB, and I'm observing only at the moment, it looks like if you're looking for engulfing candle, inside bars and levels, that is where you're making decisions, like today's first bearish engulfing. Well, I haven't seen for a while that guy who likes mechanical rules. Yeah, price action. Price action is king. Yeah, so naked. I used to, people used to, all the time when I was learning to trade, push a system or a strategy that uses indicators onto me. Everybody does, right? I do. I use indicators. But the first time I went into strats realms on Forex Factory and I started looking at price action, everybody in that forum and everybody around that sort of sphere in trading swore blind that there was no need for one indicator on your chart. You just need a blank chart and watch the candlesticks and learn price action. I was massively skeptical about it because how can you possibly have a candle that is green, yeah, and then a candle that is red telling you that you should go short? Because surely when that green candle went green, you were told to go long. So the fact that this candle went short has disproven the fact that price action works. And if I go short on this candle now and it goes like that, it means that that also failed. Yeah, it took me ages to get my head around. It's not the candlesticks, it's not the bullish engulfings and the bearish engulfings with price action that tell you what the market is likely to do next. It's the repetition of them. Yeah, 3 long wicks in a row means we've hit a level where they're not managing to get through it. Yeah, this is why my alarm bells were going off this morning. We've got a weekly resistance, which we know at resistance and support levels, the banks and institutions put orders to trigger automatically. So when we hit one of them and we keep rejecting it, it's not the fact that we had a shooting star and a shooting star. It's the fact that we had two shooting stars next to each other telling me that there really is no chance of the buyers getting through here. And if they do, by the time they've got through, they're going to be so exhausted, they're not going to be able to rally further. And they may well even want to take profit on that tiny move they've gone and become sellers, which means it's not going to get any further. That's what price action is. It's a set of clues as to how many buyers and sellers there are in the market. If you get a bull candle followed by a bull candle followed by a bull candle, you know there's a load of buyers in the market. That tells me that at some point soon, we're going to get a nice big pullback. Everyone else is looking at this going, we need to be longing it. I'm looking at it going, you need to be shorting it, because these guys can't do that for long. They're going to have to get out of their positions because they've got an absolute bucket load of profit there. And the last thing they want to do is let that profit go. So as soon as they are ready, they will hit the sell button. And as soon as the sell button is hit, everyone will hit the sell button. And you as a retail trader are hitting the buy button because everyone else is hitting the buy button because you're a sheep. You follow the sheep. But the sheep have run. They've ate the food. They're full. Now they're going to go and find a tree to sleep under. You're too late, mate. The food's gone. Price action gives you clues as to when things are going to happen or may happen. Still, there's absolutely no guarantee of anything happening with any price action. The 3-bar reversal, I keep talking about it. There's one on the chart down here, look. I keep mentioning 3-bar reversals all the time. The reason is because they are so effective. Lost it. Where's it gone? There. Let me just move along. Yeah. Strong push down. Pause. Tiny little body. Wicks can be down, wicks can be up, wicks can be both ends. And then a push back in the other direction. Sellers in control of the market, trying to push the market further, unable to do so. Buyers having more control over the market than the sellers, but also unable to do so. Pause. Indecision. They have lost control. They can't quite get control. So now we need to rally the troops. Who's going to be the next mover? Buyers managed to get control back. 3-bar reversal. Hugely successful reversal pattern. Yeah. But it's not one candlestick. It's a multitude of candlesticks telling you a story of who was in control and now who has gained control and who is likely to remain in control. But when we get back to where these guys stepped into the market, a propulsion gap, we might get a different story. Yeah. So this is why we have the propulsion gap indicator on there, because when someone takes control, there's always an area that control was initially taken away from them. When you get back there, you're going to find a battlefield. Yeah, and this is how you read price action. It's just a story unfolding. It's not individual candlesticks. This is what it took me a long time to get my head around. The fact that it's just giving you clues, again, as to what has happened in the past. Doesn't help you with the future, but you know after a while what's happened in the past repeats itself. So if you see something repeating itself like a 3-bar reversal over and over again, you will suddenly spot them and go, there's one. Wicks. You know, there's that guy on YouTube, isn't there? Wicks don't lie, or whatever his name is. It's true. Wicks don't lie. If you've got a load of sellers entering the market and the buyers beat them back, and then the sellers try it again and the buyers beat them back, the sellers aren't going to win. Why? Because they can't. They haven't. We've seen it. It's proof. The sellers cannot win. So if the sellers can't win, what do they have to do? Give up. As soon as they give up, they become buyers. The algorithms are trained from the banks to do this, to identify this. Yeah. The algorithms will dump a load of cash into the market with a view to making ticks. If it achieves those ticks, it gets out and waits. If it doesn't achieve those ticks, it gets out and goes the other way. Why? Because it knows there's a bank algorithm on the other side with more capital than it has. So therefore, it knows that that one is going to win. If that one's going to win, it joins their club and then repeats the process in the opposite direction to gain ticks. This is what draws candlesticks. Banks. All you got to know is how to read it. But the only way you'll read it is by doing it. And this is why I was told to spend 10,000 hours looking at charts, because until you've spent 10,000 hours looking at charts, this stuff doesn't get burnt into your retinas. And as soon as you see something, you just go, I've seen this before. Last time it happened like this. And it just says, get out or get in or stay in. Yeah. But you've got to get the experience. This is why, people try and find a shortcut, because it's a hard job, hard thing to learn. Takes a long time, unfortunately. And then you still get it wrong and it annoys you to hell. JC, price action has also got to be done in real time and with real money on the table. Yeah. Looking back at a chart after it's finished is okay to learn, but you need to experience the moment and the reality. Yeah, it's very different. Again, trading demo and trading live. I was told very early on, don't trade demo. Because when you trade demo, you don't make the same decisions. Yeah. When you see $2,000 in a demo account, you're like, oh, that's good. When you see $2,000 in a live account, you're like, that's the mortgage. Your decision-making process is 100% different, totally different. This is why I don't manage $250,000, $500,000 accounts. I did on prop. I can't, because I can't do it. The mindset and the decision-making process on $250,000 and £500,000 account and upwards is totally different to 100K, because the ticks are a mortgage. The ticks are a car payment. The ticks are a cup of coffee. Psychologically, you're never going to get that out of your mind, which is why I switched over to percentage gain, because percentage gain is the same on a $1,000 account as $1 million account. 1% of 1,000 and 1% of 1,000,000 is 1%. If you concentrate on percentage gain and percentage risk and forget about the money, all of a sudden you can trade any account size, because it has no impact on you at all. When you look at the finances, and this is why in all of my products, you will find a setting, apart from the Trade Manager dashboard, actually, which I kind of do need it on. But in all of my products, you'll find settings to turn dashboards on and off. Yeah. So with this new version here, you can turn this off. Get the money out of the way. Don't want to see the money. When it breaks, I'm looking for a 2R. What's the 2R worth? Doesn't matter. I'm looking for a 2R. Get the money. If you start talking about money, you start talking about making different decisions. As soon as you start making different decisions, like today, I should have stayed in. I shouldn't have got out. It's hit 2R, my target. I would have made $3,000 today. I only made 1,500. Why? Because I wanted 1,500 because the market wasn't right. And it could have gone either way. It went the right way. But, if I'd have been out walking the dog this morning or gone for a coffee with a friend and had just come back, the EA now would have banked more money for me. But because I'm sitting here, the decision making and the result was different. Again, why I say your back testing results are not going to be forward testing. You're going to get different things. Anywho, there you go. I'm going to leave it there this morning. So there's not a massive amount happening in the markets. We've got news this afternoon to worry about, 1:30. So Empire State, again, it's very hit and miss. I think at the moment, it doesn't really matter what the news is. If it's negative, the US dollar will drop. If it's positive, nothing will happen. So both of these this afternoon, really, I don't think we get a lot of movement off of them. The US dollar at the moment, wow, look at this Canadian dollar. The US dollar at the moment isn't really going anywhere today. The pound is having a lovely morning, which is good. Really wish I was yesterday, when we got down here yesterday and this drawdown control was done, I looked at this yesterday after that drawdown control was done, and I was like, shall I place another aggressive drawdown control position up there and hope it triggers overnight? And I thought, no, because what will happen is it will get spread into it and then it will drop and I'll just get lost on it. So I decided not to. If I had, my average would be down at ADR today. But nothing much I can do about that. So, yeah, so that's having a nice day today. The euro is looking like it is trying to recover, but not a massive amount of strength in this. Obviously, it's not going to be beating the pound because the pound's on a rally at the moment. So not a lot of movement in the market that we haven't seen from yesterday. It's just undoing yesterday at the minute. So we'll see what happens. But this afternoon, we should get some decent movement, hopefully. All right, so have a good morning. I'll be back this afternoon for the US session, trade the US indices. I'm going to do some more testing, see if my testing is complete. 1,039. I've got 3.5, 4 hours left on this test, and then that is my initial testing done. So we'll see what happens. 120K, very nice. This is on a 100K account, so, and this is in 8 months, so it's more than doubled the account in 8 months. You can have this EA for £6,000. So yeah, I'll get that testing finished off this morning. Or will I? 10, 11, 12, 1, 45, 2 o'clock. No, I won't even have it done by the live session. I'll have it just done by the live session. So yeah, I'll be back this afternoon. So it's just gap indicator not yet available on MT5. Yeah, everything's available for MT5 and MT4. Go onto the website. And go to support resistance propulsion. Website seems a bit slow at the moment. There's a link, MT5 version. I'll put it in the chat. There you go. Yeah, I'll see you this afternoon at 2:20. If not, Monday, same time, 7:50 for the Frankfurt session. Hopefully have a good day, and hopefully I will see you guys later. Have a good one.